Hello there and welcome to today's 5 with Fitz. I've got a couple errands to run this morning, so I thought we'd dive into a topic that I get asked every time there's a lull in the action. Is it better to be an investor or a trader? But first, let's set the stage. The markets have already begun to lurch from headline to headline, as I suggested would be the case now that we're through another earnings season. For example, we're seeing a weaker ADP jobs report, and that's raising worries about a U.S. economy, or so the press says, according to CNBC. That, of course, has prompted U.S. President Donald Trump to take issue with Fed Chairman Jerome Powell's stance on rates, again, via CNBC. Meanwhile, in Europe, auto parts suppliers are suspending output due to China's rare earth curbs, and the EU is apparently picking 13, not 12, not 14, but 13 critical new material projects. That's via Reuters. Farther east, South Korea has a new president. China's first indigenous 9-valent HPV gets the nod, and China's global favorability climbs as the U.S. ratings decline. That's via China Daily. And in Japan, the fertility rate has hit a new low despite the government push. Well, the country appears ready to say goodbye to tax-free shopping as politicians debate what is widely understood to be an abused system. That's via the Japan Times. Now, you get the idea, right? The point I want to make is that the distraction level goes up every single time there's a lull in earnings action. And so does the risk that you and I will do something really stupid with our money. So what do you do about that? Well, my take is very simple. You focus on the world's best companies and you watch their CEOs very carefully. They're tasked with making money practically no matter what. So what they say and do matters a lot when it comes to your money. Now, speaking of which, I am often asked whenever there's a lull in the action, can I be a trader and an investor? Whenever there's a slowdown. Well, many people believe you can be both, but I don't think so. My experience is that you can be a trader with investing tendencies or an investor who likes to trade around core positions. My preference. But how do you make the choice? You can't be both. The first thing you need to do is have a clear, no holds barred conversation with the person looking back at you in the mirror every single morning. I mean it, no holds barred, honest conversation. It's okay to be one or the other, but be clear about your objectives, your skills, and your emotional discipline. Mindset is key. Traders tend to focus on speed, volatility, and precision. They're looking for quick wins, nimble exits, and often thrive on minute-by-minute headlines like the ones we're seeing now. Investors, on the other hand, and by contrast, tend to think in terms of years, not ticks. They focus on fundamentals, long-term business models, and the staying power of world-class companies. Headlines are typically noise if they've got a long-term strategic plan and focus. Now, both strategies can be profitable, but mixing them usually isn't. In fact, I've seen scores of folks blow up their accounts over the years trying to be both. Now, I get it. The temptation is very, very real. You see a story break on one of the news channels, or you learn that a social media maven has locked on to a specific stock, you read a tweet, and suddenly you feel like, oh, now's the time to flip a position you bought for the long haul, or time to dig in for the long term on a trade that you bought with short-term expectations, even though it's already going against you. Now, if you've been in this game any length of time, you've been there. I've been there. We're all going to be there again. So you sell or you buy, and you watch it run sharply higher. Worse, you hear about something interesting, and you think, what the heck, before tossing it a few bucks, only to see it drop like a rock. This isn't strategy, folks, but gambling with a few extra steps. Now, long-term investors and skilled traders are very clear about who they are, and they know it before they buy or sell anything. This is really important because it's clarity that allows them to stick to their plan, filter out the noise, and make decisions based on logic, not headlines and not hype. Without it, emotions take over and expensive mistakes multiply. They're also very clear about what they want to accomplish before they put a single dollar to work. Doesn't matter whether it's capital preservation, income growth, or all three, having well-defined goals, something I talk about incessantly, helps guide every decision, and it provides a framework to measure success, adjust strategy, and stay disciplined, especially when the markets get choppy. Now, and finally, third point I want to make is that the world's most successful investors and traders have very clearly defined objectives. In other words, they know where they're going. These objectives allow them to focus on being profitable, not merely being right, like most people. At the end of the day, it's important to recognize that being in the markets is a journey, one that takes time to master, and one that, like any craft, really takes time to get good at. It's a process that requires constant learning and refining and evolution. And the more you treat it like a skill to be developed rather than a game to be won, the more likely you are to find long-term success. Let that sink in. Or at least that's my take after 45 years in global markets. Anyway, hope that helps. Let's talk about today's bottom line. It is a mistake to chase the short-term game with perfection. It doesn't matter whether you are a trader or an investor, as long as you play the long game with purpose. Your portfolio and your results will thank you. As always, let's make it a great day. You got this, and I will see you tomorrow. Thanks for watching.